Hi, everyone. I hope all you traders are having a good day out here on a turnaround Tuesday. On Tuesdays, I have the pleasure of talking to Michael Venezia about what he's thinking in the markets. I just want to tip my hat to you, Michael, on your call on natural gas. Last week, it did turn out to be the high of the move, at least for so far, and pretty good pullback, about 8% or so from that high. And what was cool about it is that you showed people, the why,
Well,
because knowing the why is gives people a chance to understand it and repeat it. If you don't understand the why and you just take a call and it works, if Mike's on the beach, how are you going to pull the trigger for yourself? So that's our goal, is to share what we've learned over the decades, Mike, and give people tools and to be able to do this on their own. My belief is you want to end up being uh, dependent on no one and independent completely. Even
absolutely.
even though, like, you and me, we there are people we respect in the industry and we want to keep in touch with their work. We still have, it's got to line up with what we see as well. And we just don't take recommendations blindly, and either should anyone who's hearing our voices today. So uh, today, Mike, I want to discuss what's happening with yields. US dollar yen, I thought was going to stop at about 112.50. It just, on a quiet day yesterday, just completely blew through the top line of a rising wedge, following through today. Strangely enough, yields aren't really sharply higher, but the yen is saying that higher yields are here. I think the 10-year at least gets to 168, and the
Wow.
possibility of it taking out the March highs is there too. What's your take on yields here?
Well, listen, Coach Dale, straight up, I'm going to say that when it comes to what's going on with the dollar right now, especially what I know what's going on with the currency or forex side of TradeView, from especially the executive committee, if you will, I say I leave that to the professionals when it comes to forex or currencies. When it comes to rotation, naturally in the markets, it's
Right.
prevalent, and I see it here. It affects technology stocks. It affects the bank stocks. Everybody runs to, there was a good question this morning. Why is an AT&T a high dividend yield stock? Imploding it, for lack of a better term. And, sometimes the market doesn't have a memory from day to day, but certainly you could start seeing it play out now. And if I digress, I said something in yesterday's video, and I'm just, I wanted, for the reasons to know why. I've seen through a quarter century of trading, pandemics. I've seen presidential, everything, geopoliticals. I've seen disasters, and even that the market bounced back from the COVID, the proverbial V-shaped bounce back that we've had. The number one thing that drives the market is money and interest rates. It always will be, and it's happening now. So
Okay. All right.
yeah,
So we're pressing up. It was only a few weeks ago we were, you know, maybe a month ago, 113 was the low of the pullback from the March highs in the 10-year. And now it looks like we want to attack it. I know that on the last broadcast you and I did together last week, you showed the TLT
it's right
and you
there now.
showed that
Yes,
little bear flag. That's before it broke down.
it's right
Good
there.
call, Mike. We're continuing lower. And you know what, Mike? It's not just happening here in the States. It's happening in the UK. It's happening everywhere. It's like we're entering a new regime of central banks trying to, sponge up all the liquidity they're going to need, more than a bucket, to sop up all this liquidity that we've had for what's it been? QE started in '09, really never stopped. So an awful lot of liquidity out there to sop up. So
It's
go ahead.
listen. It makes there's the world market index. I always post it in the morning because it's, what I just because then there's Japan, if you see right here,
Yeah.
which is going into the index or the RSI. And by the way, I say never predominantly use trading on RSI. Like you said, we're trying to give people the tools. I also use the analogy of we give you, a fork, a knife, a spoon, and a plate, and those are a bunch of utensils to sit down and eat a nice meal. This is maybe a fork or a spoon, just a sentiment, but you can see what's going on with Japan. But it's become a little bit more interesting because older gentlemen like yourself, the market's becoming more interesting and cerebral. I like reading up what's going now, just instead of looking at some percentage of volume or brightness or Fibonacci placement.
Well, you know what, you just called me an older gentleman, so I'm not going to push back on it, but I'm going to confirm it that with all the volatility that you have in crypto now and real high beta stock issues, that ARP has approved currency trading for senior citizens.
Is that
because
so?
the beta is so low.
I bet you don't get a discount. I bet you don't get a discount though.
The only discount is when you don't put your stop in and you're wrong. And you'll discount your P&L into oblivion if you do that. Mike.
That's right. And you know what? If you don't do that, then you might really wind up going with the early bird special every night and get destroyed.
Yeah, well, the last time I used a mental stop, my first stop was a mental institution. So anyway, a lot of people say they do that. So, Mike, you've been showing the Q charts and the NASDAQ, and it's the first time I've seen you really kind of saying, it better get going to the upside or we have some down. I've covered my shorts and I'm nervous about, you ever cover a position and you did well, but then you're kind of like you're having no exposure. You feel exposed. I feel exposed.
Well, the answer coming from my trading style resonated from being a contra trader. And if anybody knows, you'll know, it's Tim hopefully listening, if you're a contra trader, you're wrong before you're going to be right. So getting back to what you said, I'm not nervous about not what I'm in. I can always re-enter the trade. I just get nervous that I wasn't in for the meat of the trade. And I think that we were kind of I know where we shorted or we were in the trade, Dale, and we were in for a good meat of the trade here. You know what? And there's the chart of the Q.
Well, it's still above where I covered, but
that's true. That's true.
But back then I had a pretty longer term negative forecast for, you could take it down there.
You did the right thing. I don't care if this is the Qs. I don't care if it's gold or whatever. When something makes this type of a move with that type of volume, part of your job is to take an accelerated move down.
Yeah, tactical.
That's all. Yeah.
All right. So you're saying we have to get above the moving averages to stabilize. It was really a lousy close yesterday, and yields are really what a lot of people are starting to pay attention to. And you're absolutely correct. I mean, the S&P, but that didn't even close good. But a lot of the NASDAQ stocks, if they rally from here, they're going to have to fight the higher yield. Now, I think what would save the market right here is the dollar not breaking out. Because a higher dollar, I've heard people say the dollar is a wrecking ball for most asset classes. So the market needs a dollar pullback, I think, to stabilize it and give it some jet fuel to make a new high into the end of the year.
I agree. We're also coming up to
God, I want to talk about Tesla. Will you put up that Tesla chart?
A Tesla chart?
Yeah.
The bonds, look at the bonds making the move right now as we go.
Are they pulling back or?
No, they're making a nice bounce up.
Okay.
What are we talking about? The Tesla chart?
Yeah, I want to know what you think of Tesla and pull up the Tesla chart.
Okay, this is what I think of Tesla.
Okay.
I think Tesla, oh, Jesus Christ, I could come under scrutiny by this.
It's all right. I got your back with Elon.
I think it's becoming a new generational Apple. I think it's a place to park money.
Okay.
I do. I think that when you have a stock like this, what this, Dale, this looks like IBM in the 90s. You know what I mean?
Okay. Steady as she goes.
Steady, yes. And you can compare any of the stocks in the sector. There's NIO, the arguably second of breed, General Motors. You know what? It's not, Tesla isn't even in the category of LI Motors or XPED Motors. This is the same chart right there. Yeah. GM. That's it.
GM looks great.
The GM, Tesla, and Ford, and even this Toyota Motors is even bouncing for what I remember. Somebody told me, look at Toyota Motors, Jesus Christ. So, you know what I mean? I just
Yeah.
think, I don't think it's something that he took over from like Solar City. I think these are, I don't,
Oh, I remember the first when he was a pink sheet stock, Mike, really going all the way back when they first built the plant here in Southern Cal. And God, wish I would have bought the pinks even back then, or they were
oh,
bulletin board. I mean, before they were even, on the big board on NASDAQ. I remember the development. I go, wow, that is a cool looking car. It's amazing what I've seen in 20 years.
you know what? And I don't want to become the cliche of the pizza delivery guy. I'm in upstate New Yorker at least right now, and I'm seeing more and more of them. And I don't want to be the guy like when I consider getting a Tesla, then that's the top. But I don't even think that's the case. It's obviously much more than that. And even you can even go by the weekly chart here. Why would you argue? It's much like we started off the show, if you will. The markets had a bazillion reasons to crack: disease, presidents, geopolitical, and it's just like this. It hasn't. So why would it? Why would it? Why would it crack?
It's a great point. Now we're fighting higher yields. People still worried about all the defaults that are happening in China. Nothing, but as a technician, I'm sure you have a bull bear line where you're going to say, you know what, I should probably be raising some cash on a lot of my holdings, because let's face it, everything cycles. We really haven't had a bear market for, I don't know,
No, I
for such a
understand that.
long time. There's a whole generation of traders that it really a generation. Well, we had 2008. That wasn't such a severe bear market. I mean, it was because we were at such lower levels. Remember, 1,500 S&Ps is where we were at in 2000. Right around for the prior tops in 2000, we were there in the S&Ps, and in 2008 we were there in the S&Ps, and yeah, we pulled back to the mark of the beast at 666. But I mean, look at where we are now compared to that. And we had, there wasn't as much air in the balloon. Do you know what I'm saying? They weren't as blown. Wasn't as much participation. There wasn't crypto. There wasn't NFTs. This period of easy money that we've had for so long has generated different classes of investments. We never, I thought after the housing crisis in '08, Mike, I didn't think that housing prices would ever come back and make new highs after that. I thought they could recover, but, now we're in the opposite situation where we have a housing shortage. So, I mean, we have to credit, easy money with what we've accomplished in the financial markets. And, that makes me think if we're going to continue to have bull markets, we're really not going to have tight money.
Well, I agree with that, but I have to say that, and we had Miss Helene on last month, if you
Yeah,
will, and listen, it's boring,
that
but
was a great line. It depends how thick your pencil is.
no, but to a degree it is, Coach.
Yeah.
What I'm saying is that, you know, until I'm proven differently, I can't be the wise guy to step out in front, because that's how you really get steamrolled.
Hmm. Yeah.
So, the cerebralness Mark, I get more and more guys, at least in my Twitter feed, and, not that I'm a tweet guy all the time, the market does have no memory from day to day. I can go by, we can give everybody the charts and the utensils, and the cues do, a lot. The standout trades should be more prevalent more than ever, instead of just, taking a chance, because you can't.
All I know is I pulled up the Tesla chart and I follow it, and it looks a lot like Facebook did at the top. You have a lot of momentum, non-confirmations. I wouldn't rule out a new high, but to me, it looks like there could be some distribution. And I mean, who's still short Tesla? Everyone who was short, Jim Chanos, all those guys got taken to the cleaners. I
No,
don't think there's too many
but
shorts left in Tesla. Do you?
no, I don't. But I'll tell you what, there are shorts in stocks like this. Avis rent a car. Look at the chart, which is 143.
Beautiful.
This was a bank. This is Avis, whatever.
Yeah.
This was bankrupt. This makes AMC look like Bank of America. Let's look at some other charts. I mean, the market
What
may
a
be weak
recovery.
and
Yeah.
the Qs may be down, Dale, but look at this. You look at stocks like MGM. It's up
Yeah.
it's up at 5%
Look at
today.
that.
It's making a new high.
It's like what Jim Cramer always says, there's always the bull market somewhere.
This stock I didn't take last night, DQ. It was up $4 yesterday on huge volume. Now it's up $4 now. Run I had, if you see at the top right here. I had
Yeah.
4,000 shares. I sold it. I punted it like a baby. And
Yeah.
this kept going. So what
Yeah,
I'm
I
saying
saw
is,
your broadcast yesterday, and yeah, you were looking for, you know, these stocks to move. I've been watching your, it's been about a year we've been together now, Mike, and so I watch your stuff because I teach, and I've seen hundreds upon hundreds of traders in different styles, and what I'm impressed with you is how you're able to have such a large universe of things that you follow and trade, and it's almost like you're an encyclopedia
well,
of curating all these different stocks. I have a hard time following more than I could follow things, but I have a hard time being in more than 3 positions at a time.
Well,
So
a couple of things. Appreciate that, and that's a high compliment from a person in your level, Dale. And there's a couple of things that for that. First of all, I got lucky that I was in the right place at the right time. I was at a good firm before this. I was taught very well. It's considered the godfather of the play or the birth of day trading, Schoenfeld Securities. So I got the ball handed to me. I certainly ran with it.
was that Souls Bandit days?
I just missed it. If I was, I mean, that was one of my fortes.
Yeah.
But I just missed this. I got it. I got there at about the 8th inning, and I got there at about the 8th inning. But getting back to what it is, and this is not pat Mike knees in the back hours, try to convince the viewers and everybody else out there that putting egos aside, and I certainly don't have one, I know you don't, that we're trying to give everybody a compilation of what we've known throughout the years, the best method to take money out of the market every day. Certainly, you told me that I have an amalgamation of stocks and everything like that. But that would be actually somewhat hypocritical to my belief. It is that way, by the way. I do have that encyclopedia, and I should. But I try to make less is better. I don't have 9 screens anymore. I got a couple of big screens, blah, blah, blah. But I'm trying to just like I say here, is have everybody have a, I don't want to call it a system because it cheapens it. That's it. Price action, a good price action, a good range, and good volume. Let's look what happened yesterday. Look, it's like right here on the top, on the back right. NET had good volume, huge range, and it was up. What was it? 3% for the day. Where's net today? All right, it's up $1.87. It's not a barn burner, but it was up even more. Let's go to the next one. But what I'm trying to say is, if every trader here would take the top 5 or the bottom five stocks that had good price action, good range and volume, not complicating things. I also talk about a lot about option flow, which I post every morning. I'm not trying to split the atom here. I don't have enough money to move the market, but the option guys that I do. So I follow them. It's not too late. I mean, some stocks that we trade 100 million a day. There's plenty, there's plenty of room for everybody to get in. So, I do have, my job is to have a plan every day. I do have a routine. I use the cliche, and I'm not going to cheapen it by saying it all the time. LeBron James, starts by he makes 100 free throws. He doesn't start by going half court and hitting game-winning 3-pointers to end the game. He does the complete opposite. He goes under the backboard and he hits 100 layups off the backboard. Tiger Woods doesn't go out and take the driver out and say, all right, I'm going to warm up. I'm going to hit a bucket of balls, 300 down the middle. Quite again, it's the opposite. He takes out his wedge, the easiest club out there, and he takes a half a swing. So when it comes to game time, he doesn't have to worry about his left arm being straight, his head down, or LeBron cocking his hand, or his wrist action. Boom, the market opens and we're ready to go.
All right, well, Mike, I want you to grab your wedge, because last week you showed us the how as to why you thought there could be a sell-off in natural gas. And I caught your analysis yesterday, and you're starting to get some of similar message in WTI, which topped $82 at one point today. And I was wondering what you were seeing that uh, told you that there's a possibility of a price pullback in the energy market. A lot of people are saying $100 oil by year end. I'm not in that camp. What are you thinking here? And what was the reason that you thought there would be a little pullback in the energy space? And I think there was an OIH yesterday, really didn't perform, even though crude was up. The shares are actually underperforming the commodity, which is the opposite of what's happening in precious metals, where the commodity is outperforming the shares.
Well, I'll tell you another thing. They're not done yet. These are a couple of oil. Okay, let me get back to the UNG question. And by the way, this doesn't have to be this is natural gas, the general, just like USO is for crude.
What a beautiful three drive to a top formation you just showed on that.
Well, this is why I did it, Coach. And it didn't matter. I'm sorry about this. I got a lot of things going on.
Yeah.
It didn't
One,
matter
two,
what the
three.
symbol is. This could have been Coca-Cola.
Yeah,
It could have been gold. It could have been widgets.
right.
So obviously I'm making, this has been
A chart is a chart is a chart, Mike. The only difference is leverage and beta.
That's correct.
For the title.
So obviously I know what else goes with the natural gas stocks. CLR goes with the natural gas stocks. I'm short a little bit right now. I'm not going to lie to you. RRC, the same thing. SM Energy, Chesapeake Energy, the car, if you will, the Avis rent the car of natural gas, which was $1 at one point. That's going there. So let me go to why I did it. Okay. Now everybody was trying. See the volume here.
Yeah.
Everybody was tempted to do it. This is the breakout, obviously,
right
here. Everybody was tempted to do it. This is when you should have been buying, or at least in the anticipation right here. This is where you should have been long at 13.97, anticipating it would go through the double top, especially when the volume came in. Forget about the short. And I was long it here, I believe. I actually had a position in some of the stocks. I digress. So now natural gas makes a move from 14. Here's my prices on the right to $16. What's that? 20%, big move. But the volume really isn't that big yet, because I've seen natural gas do this type of volume here. It didn't even do it yet as of there. So now I'm looking. Now I saw the gap up. Now it had a pullback on volume. And then it had a gap up to take out shorts. And the bottom line is, when it had the biggest volume it ever did and then broke out to a new high and then had that bigger volume, that was the top to me. I don't know if that makes sense. You had to kind of, it's one of those stories where you had to actually have to be there instead of telling the story. But certainly with that top, with this volume here that they have 20 million.
Well, isn't it interesting?
Hold on a second.
All right.
The stock led the commodity. That's why I asked you. Those stocks had already topped and had the volume. So the stocks told me that it topped.
Okay. If you pull back that chart where you had the volume day, within your one chart, the divergence that we had on a three drive to a top, if you just look at your first high, you said all the way, in September, that high, no, one more bit, that to the left, the first high. No, the red candle reversal to the right. There.
I got you.
At the high.
Okay.
So that was to the right. There, the high at the $20. Anyway, that had an RSI reading about 80. Then we pulled back, and then it rallied to a new high, and it was a lower RSI reading, and then it moved sideways, and then we rallied and we stayed under 70. That's one of my RSI formulas. So
right, okay.
Combining the volume and the RSI, it was really a nice marriage for taking a shot at the short side.
And that, you know what, you helped me with the trade. I'm not gonna lie, because I asked, it was an edification that I wanted to know if stocks were actually leading the commodities. Time for the real meat of the trade was, you're right here, and I didn't do it, was when this RSI was at RSI was at 81.
Yeah.
And that was the time to do it. Why the RSI there? Let me ask you something. Why was this precipitous pullback? I went on the volume. Why was the RSI here
lower?
65?
what it's saying is with each successive high, momentum is being lost. So,
Oh, okay.
so you had slowing momentum, and you had after the peak momentum, you had two new highs with two lower momentum readings, and that's a three drive to a top formation. Usually, a rising wedge accompanies it too. Man, it's really a great time. I could probably talk to you all day, man. What do you want? What do you want to wrap it with for the rest of the week, Mike? I think we have some inflation numbers coming out this week. What is your major focus for the rest of the week? And are you, uh, you know, willing to share your curated lists on Twitter and have people come here and not just hear us on YouTube, but we're starting to get some people come in here and participate and ask us questions. And uh, the invites out to all that hear us on YouTube. If you like what we're doing, besides giving us a thumbs up and making a comment on the interviews, if you come in here and there's things that maybe you don't get from hearing us on a live stream, we're here to help you. And
Is Facebook approaching this 200 day right now? This is a big
yeah,
move on it. You can see my chart apparently.
yeah,
This is listen, I don't know if it holds as much water anymore, but
yeah,
this is a big situation here with Facebook. You know what? I
it
wish it had
is.
more volume. I wish it had this volume. I'd consider it, but now I'm getting pinged that, Facebook's at the 200 day. You're asking me, what am I looking for the week?
Yeah.
Uh, let's look at my Twitter feed, which I always tell everybody is about quality, not quantity. Uh, we'll wrap it up. I know, because I got to do some things here. That's not a good sign when they tell me to wrap it up. It means I'm down on something. uh, I'll look at the earnings of the rest of the week. We have Delta, we have BlackRock, we have Wells Fargo, a lot of banks, Alcoa, which has been the bellwether, is aluminum shortage, Goldman Sachs, Schwab,
Yeah.
Citi, Domino's Pizza, holds more water than it should. Morgan Stanley, I'm shorted. So I'm going to look at the banks. We're talking about the TLT, and I'm going to see what's Morgan Stanley doing, by the way. This should not be up. Yeah, this is
Well,
stock.
that Facebook looks ugly, so we're taking out last Monday's low after the 60-minute story.
Yeah, and you know what? God forbid, for lack of a better term, it comes with any volume. I know it's been skewed, but you know what? It's always a bad sign when a trader goes from the daily to the weekly. You know what I mean? That means
Yeah,
it's usually more.
yeah.
So let's see if it holds the line here. I don't know what's Apple's doing. Stocks are taking. Well, you know what? Let's see. What am I holding? You got to listen. This is what's going to happen. I'm going to go right here. We'll go to the TradeGate Hub. And just like I do at the end of the day, I'll fill everybody in at the movers. I'll post a list. If it depends if you're an active trader or a longer trader, a swing trader. I'm going to take what I think of the top five, the bottom five. I'm going to take what is a pure play for me, what I like with price action volume. It's acting well. Hopefully the chart coincides. The rotation also coincides. It's an uptrend. The futures go. And then we're going to, they stick. Some of them sticks. Then it goes down to getting out of your winners and your losers. Hold your winners and get out of your losers. It's that easy. I don't want to make light of it, but the principles are easier than the execution. That's all.
Well, Mike, it was great bantering with you today, and I'll see you in the room. Remember that we're here to build up and edify traders every day. So that's our mission here at TradeGate Hub. If you're interested in learning, let me tell everyone this. You're going to pay somebody. You're going to pay the market, or you're going to pay to learn. And we're not even charging you to learn. So we invite you here. And if it is a choice, you're always better off paying to learn than paying Mr. Market, or it could be an Ivy League tuition. I know that I've paid Mr. Market, and Mike and I both stepped on landmines, and and we're still wrong at times. I thought the yen was going to stop at 112.50, and here we are, almost 100 higher. So, but we can help you avoid some of the mistakes that we've made in the past. Um, you can't learn experience. It only happens with the passing of time and living through adversity and being and persevering. But you can learn from those that have already done that. So that's my open invite to people to come and join us here at tradegatehub.com. Mike, I'll see you in the room. Thanks for your giving nature and sharing your ideas with us today.
It's an honor. And thank you, coach, as well. Everybody always ask questions. one of the things that we pride ourselves on, please call me out on it, is getting back to people. It's a courtesy. If someone's taking the time to listen to us, I can at least take the time to answer something back. So trade well, have a plan. We'll see you tomorrow. Have a good
Okay,
day.
buddy.